Welcome to Wealthing Talks. I am your host, Alicia Castillo Holley, bringing you real-life conversations from Silicon Valley or somewhere around the world. We will talk about disruptors, angel investments, venture capital, and of course, family offices. Join me along with my children, their families, friends, disruptors, and investors as we explore the fascinating world of creating wealth in a completely different and authentic way. Well, thank you, Tatijana, for being here with us. It's such a pleasure. I've seen you just work diligently for your fund, and I have a lot of admiration for you. For our guest, it is a pleasure to have another VC here with us in an area that I don't know that well. So, Tatijana, why don't you tell us a little bit about yourself?
Yeah, thank you. So I'm originally from Eastern Europe, came here many years ago, and via Chicago ended up here in Los Angeles. I've been investing for over a decade now. My focus is artificial intelligence, B2B fintech, all early stage. And we've been doing this for the last 5-6 years with my two partners now.
How did you get into investing? That doesn't seem very Eastern European.
It doesn't. And also I studied architecture and engineering. So when I think about it now in hindsight, it's very much like this perfect combination of UI UX. It's very much about the combination of creativity and science. So I really appreciate the background, but certainly was not something, investing was not something on my radar for many years. Moved to Chicago. I was building high rises, and then I ended up in business school, and that's kind of how I got into the world of capital markets.
Wow, that's so interesting. That's similar to me. So I grew up in Venezuela, and we didn't talk about money. That was not in, didn't even occur to me. So that's really interesting. And yeah. Is there any big lessons that you've learned in this journey?
I think for me, it was to do things sooner. I think especially as women, we tend to want to learn everything that's out there and really like apprentice for many years. And I think we're better off just kind of moving into our own path and like doing things before we're ready. So I think that's what in hindsight, the things that I'm doing today, I should have done even earlier. And I think that's my only regret.
And what would you tell somebody else, men or women, that might be listening?
Yeah, I mean, I think you're probably ready before you think you are to kind of venture off and do big things and do them on your own. And you're more capable than you realize working within large organizations. And that's something I really like couldn't have known until I went off on my own 6 years ago, because I really appreciated working at large organizations and kind of like aspiring to partnership at a large investment bank or some of these other large organizations that were very inspirational for someone that came from a different country. But now that I've been on my own for 6 years and building different businesses, I wish I would have done that sooner.
Yeah, that makes sense. That makes a lot of sense. But it's probably in other cultures or in other regions that's not that easy. So you need some support. Is there any special support that you felt that you have received?
Yeah, I mean, I've had so many mentors over the years. I worked for Peter Stein 10 years ago. That was kind of my first entry point into investing. when I moved to Los Angeles. He was the former CIO of the University of Chicago Endowment, the deputy CIO of the Princeton Endowment before that. Had learned everything from Andy Golden. And I was so fortunate to kind of fall into this investing world under Peter's tutelage and really learned the foundational elements of endowment investing and really kind of build my career from there. I think that was just the best grounding I could have possibly had.
And tell us a little bit more about your fund. What do you do? What
Yeah.
does the fund exactly do? You already said what is your overall investment thesis, but there's people that are here from all over the world, and they might not know exactly if they fit, if they don't fit, how would they approach it? Do you invest alone? Do you invest with other people? So tell us a little bit more about the fund.
Yeah, thank you. So Pure, we've been investing for 5 years now. I'm the general partner, and my two partners are both unicorn founders in our two sectors of AI and B2B fintech. So my partner, Ryan Chan, is the founder of Upkeep. It's an enterprise solution for distributed maintenance teams for organizations that have complex physical assets that need to be managed, have large blue-collar workforces. That's a big area of knowledge for us and those legacy organizations and what do they need as they're going through a digital transformation, both yesterday and today, with the advent of just what AI has made possible. And then our other partner, Charlie Fang, who's in Silicon Valley in San Francisco, he's the founder of Clearco Clearbank. That was a pioneer of e-commerce credit. And now his third company that he's building, Agora, is on-chain governance. So he kind of splits perfectly the world of both traditional fintech and DeFi fintech, given his experience at both Clearco and Agora. And so that was really part of the thesis. I'd been working on building my startup, which was this decentralized tool for independent merchant bankers. I was helping other venture firms, other top founders on their investing, and just saw like this incredible opportunity of top founders and how they were investing in their own sectors, how founders really wanted them on the cap tables for the mentorship, for the knowledge. And that was our big kind of aha moment, and we've been building ever since. So it's really founders helping founders that are 1, 2, 3 steps ahead, that are really insightful when it comes to just the tactical elements of building a startup and can be on the ground mentors.
So you have had some pretty interesting companies. I remember I saw a chat that you said did you have exits already?
Yes.
Oh,
So
good.
market where hardly anybody has had exits. We've been able to exit a few of our top winners through the secondary market. So we just, Charlie was a day one investor in a company called EvenUp. They were a pioneer of legal AI tech. They just had a large oversubscribed round that Bain Capital led. And so Charlie exited that investment at a roughly 62x MOIC from the time of our investment in 2019. And then
62 times. That just wait. Just say it slowly.
Oh, yeah.
62 times in 5 years?
Times in 5 years.
Wow.
That's a real exit, real number.
That's a good one.
That's a good one. And Zip is an even larger exit for us. So we have an offer to sell our position in Zip, which is procurement software.
Mhm.
They had a round valuing them at, I believe, 2.2 billion, and it's less than 5 years old. So we're still waiting to get our QSBS status before selling, but that is a 70.5x MOIC that we
Oh my gosh.
any day now that we have a
Yeah. Wow, congratulations. So this is just for those listening, believe in emerging fund managers. They talk less and they do more. So that's it. So I'm very, very happy about that. Very, very excited about your exit. And you're you closed this fund, right?
No, we're open through end of May, so we're kind of in the tail end of rounding out our capital. So very, very happy to meet new investors and really grateful for all this.
And the new investors, sorry to interrupt. Well, not very sorry. I'm just very excited. And the new investors would benefit from the previous exits or not? How are you going to manage that?
Yeah, so the portfolio already has 10 investments that we've made since early last year, since 2024. The prior exits, I mean, we still have access to those companies to the extent that investors want to invest in some of our early winners as in their future rounds. But otherwise, like those are not in the current fund.
And do you do SPVs or just the limited partners in your fund? That's the only way to get into those deals.
Yeah, we will work on SPVs primarily for our existing investors, just because like we're a small team, we don't really have that much time to manage SPVs outside of our investor base. But we're very happy to work with investors on helping them scale their portfolios on a direct basis as well.
So you have 10 investments, you're closing in May. I'm so sorry, I'm going to miss your event.
Yeah.
I am so sorry because I changed all my flights just to be there before I went to Australia. And then I realized that my daughter was arriving 2 days before in Australia and I need to be there with the whole family. That's the whole purpose. So I missed I miss her arrival by a week. So I had to change again. So you have a big event now. And then you have 10 companies. How many more investments do you think you're going to make?
20 to 30. We really believe in the power law portfolio construction and venture. We want to have a portfolio of about 40 companies in each fund. And so we think we'll be materially deployed by end of next year when we'll launch our second fund, our second institutional fund, if you will.
And this is pre-seed and seed or which stage?
It's all pre-seed and seed, and it's primarily top US tech hubs. And again, that's organic to us. It's not really by design. It's just where our networks lie. It's also where we found that founders have connectivity to top talent and top capital. So I think we've seen a lot of success in those markets, primarily Silicon Valley, Los Angeles, New York. We have one company in Salt Lake, for example. And again, it's not dogmatic, but we've just really seen that and also seen the macro research about the industry and knowing that top US tech hubs do produce outliers predominantly more so than other markets.
And your check size is around how much?
So we'll be deploying about $200,000 per company at the earliest stage with very small follow-on capital, which basically we think will reduce J-curve, will really get our investors' capital to work. And then as those companies scale, we'll offer those investments either on a direct or co-investment basis.
That's pretty cool. Any thoughts about your best day as an investor?
My best day was definitely the first close of this first institutional fund. It just made everything so much more real. I mean, we've been working towards this for many years. We have a longer track record than I think most fund ones do. But nonetheless, like just having this like first institutional close with incredible LPs around the table, I've never been more excited.
That's good. That's good. And biggest challenge or failure?
The biggest challenge, I think just having enough time in the day. That's why we try to be so thoughtful around how we're using our time, how my partners are using their time, the fact that they're still running their companies is like a huge competitive advantage to how we source, how we understand our markets, how we evaluate startups as a potential customers, for example, potential channel partners. We go so much deeper because of that, because of like what we're doing on a day-to-day basis, but at the same time, like we have less time for other parts of the business. So we try to be just really thoughtful around how we spend our time.
So you have, so when you invest in a company, can you also become a supplier or a client of that company? Is that the way it works?
Yeah, at Upkeep, I mean, again, it's 150 employees, large growth stage enterprise solution. And as part of what Ryan is building, and he's, the solo founder CEO, those types of companies are often customers of early stage startups because those are the building blocks of larger startups. So when we do diligence on other AI infrastructure tooling, dev tools, other enterprise solutions, we have this deep dive as a potential customer as well.
Oh, that's fantastic. And have you done purchases from your portfolio companies? Because I think that's the way venture capital is going. That's the way we are going.
Yeah.
We invest if we can find a client that's going to buy. That's better for us. So how does that work in your case? That's really good.
Yeah, we definitely have become customers of some of our portfolio companies. Or we can also introduce them to some of our customers, for Upkeep, for example, or Agora for that matter. So we're definitely very active on helping with channel partnerships, with customer partnerships, and really have a very close pulse to the market of what's happening.
Oh, that's fantastic. Wow. I didn't know that.
Oh, yeah.
Oh, I didn't know that. That is great. That is fantastic. Now, tell us about your legacy. What do you want to do when you're not? Oh, actually, let me just put it in another way. Sorry. I don't know if you know that, but I was in coma when I was 13. I died and I came back 4 days later.
Oh my gosh.
That was so cool. That was so cool. Well, I was 13, so it's like, but I always think who I am when I'm not here in time and space. So I don't think about legacy in an egotistic way. It's not about my name, but it's more about what do I do with this gift that I have that is life, because I lost it and I got it back for no reason. I don't know why I got it back. So do you think about that? Who do you want to be when you're not here in time and space? Or who are you when you're not here in my house and we close this conversation?
So that's a really interesting question. And I don't know that I think about it quite in those terms, but the name of the business of our fund is Pure, and it means life force, like lifeblood. And to me, it really speaks to the stealth life force of all of our like stealth networks that we don't necessarily publicly talk about, but they're there and they're like a big element of how we find success. And I think a lot of the most important things in market actually happen underneath the surface where people aren't like readily putting that out on social media. The really impactful meetings and conversations that are happening in our market. So when I'm not here, I think I just want to be remembered for like kindness and hard work. I don't know that we're ever going to be famous as a firm because other than our performance, I hope we're famous for our performance.
That's great. That is fantastic. Yeah, it's a good question. It's a good thought too.
Yeah, and
or
in my last memo, I think I posed the similar question to like Howard Marks when you were building Oak Tree day one, like what was your aspiration? Did you have aspirations for building this like behemoth um giant like market leader? And Howard's thought was like, no, like we were living in the moment, like doing good work was a reward in and of itself. And so that's kind of how I like to think about it. Like the work is very rewarding. And I think if we do all the right things, you know, we will build the firm.
yeah. What is the impact of thinking beyond just capital?
I think it's just being really thoughtful around what it means to be a good human in these markets, of not being transactional, of being commercial but not transactional, of being really like shrewd as an investor, but at the same time kind as a human, and having this sense of blind auditions where you're really investing and backing people based on their characteristics and capabilities and not necessarily their, you know, their pedigree, if you will, of where they went to school, who their parents are, et cetera. So I think those are big, like kind of like character aspects of how we think about the world, and we try to be just really big cheerleaders for our startups, and really optimistic and really supportive, because ultimately, like, yes, a lot of things fail in these markets, but I think the best thing you can put out in this world is just kindness and really being a strong supporter as opposed to a detractor and constantly trying to second guess.
Yeah. Yeah. Thank you. I think that's very important for people to hear and to understand that not all venture capitalists are vulture capitalists.
No,
Yeah.
I don't think
Yeah.
so.
Yeah. Very
And
good people too.
firms out there are just like really kind. Like the GPs are really kind. And that's not to say that they aren't shrewd. They're shrewd. Like you have to be both. Some of the most successful people are also like by far the nicest.
Yes, I agree with you. Any last thoughts for this podcast?
No, this was so fun. And as I told you, this is my first podcast.
Oh, this is so fun.
This is
I love it. I love it. Well, thank you so much. And thank you for being here. Well, I hope you enjoy listening to Tatijana as much as I did. She had never done a podcast. She's extremely talented. And I have seen her for the last 2 years raising her fund, extremely resilient and diligent. And I've invited her to several VC gatherings that I hold. Very, very impressed by her progress, as you can see. She's a very humble person. I hope you enjoy this. I hope you get a different feel of what an emerging fund manager is. And I look forward to seeing you at another Wealthing podcast. Thank you so much for being here. Thanks for tuning in to our Wealthing Talks. I hope you've enjoyed this conversation. To stay connected, visit us at wealthing.com. This is Alicia Castillo Holley, your host, and until next time, yours in Wealthing.